What if I told you that a small group of billionaires quietly influence nearly every major company in America? Not by running for president, not by appearing on reality TV, but by controlling trillions of dollars behind the scenes. When you check your 401k, when the stock market crashes, when your mortgage rate jumps, the decisions that shape those moments often trace back to Wall Street and to a handful of powerful financial giants. Tonight, we're uncovering who really controls Wall Street. When most Americans picture Wall Street, they imagine screaming traders on the floor of the New York Stock Exchange. Fast trades, flashing numbers, chaos. But that image is outdated. Today, markets are driven by massive institutions, not individual traders. And the biggest power players aren't hedge fund cowboys, they're asset managers. Firms that quietly manage retirement accounts, pension funds, and index funds for millions of Americans. And three companies stand above all the rest. The first is BlackRock. BlackRock manages over $10 trillion in assets. That's more money than the GDP of most countries. Its CEO, Larry Fink, isn't a celebrity billionaire, but his annual letters to corporate CEOs are watched like presidential speeches in the financial world. Next is Vanguard Group. Vanguard pioneered low-cost index funds. Millions of Americans owned Vanguard funds through their retirement accounts, often without even realizing it. Then there's State Street Corporation. State Street operates some of the largest ETFs in the world, including funds that track the entire U.S. stock market. Together, these three firms are often called the Big Three. And here's where it gets interesting. Collectively, they are the largest shareholders in most major American corporations. When you buy an index fund inside your 401k, you don't directly own dozens of companies. The fund provider does. That means BlackRock, Vanguard, and State Street vote on corporate decisions. They vote on executive pay. They vote on board members. They vote on mergers. In many S&P 500 companies, these three firms together own 15 to 25% of shares. Individually, that might not sound like control, but combined, it makes them the most influential voting bloc in corporate America. They may not run companies day to day, but they influence who does. Asset managers aren't the only power brokers. Major banks also hold enormous influence. Take J.P. Morgan Chase. Led by Jamie Dimon, J.P. Morgan is the largest bank in the United States. During financial crises, its stability can calm markets, or its weakness can shake the economy. In 2008, major banks nearly collapsed, triggering the worst recession since the Great Depression. And the ripple effects hit everyday Americans through lost jobs, foreclosures, and wiped-out retirement savings. Then there's Warren Buffett. Unlike Wall Street executives, Buffett built his empire through Berkshire Hathaway. Berkshire owns massive stakes in companies across insurance, railroads, energy, and consumer goods. When Buffett makes an investment, markets react instantly. His influence doesn't come from managing trillions in index funds. It comes from long-term ownership and trust built over decades. Different style, same massive impact. So here's the question. If three firms are the largest shareholders in most major corporations, does that concentrate too much power? Some economists argue it creates stability. Index funds reduce costs. They allow ordinary Americans to invest cheaply. Others argue it reduces competition. If the same investors own large stakes in competing companies, do those companies compete as aggressively? It's a debate happening quietly in academic circles, but it affects everyone. This isn't just about billionaires. It's about your retirement. Your 401k is likely invested in funds managed by one of the big three. When they push companies towards certain policies, environmental, technological, or strategic, it shapes corporate America's future. When markets rise, your balance grows. When markets fall, you feel it. Wall Street isn't some distant casino. It's directly connected to Main Street. During times of crisis, influence becomes even clearer. In 2020, during the pandemic market crash, the Federal Reserve partnered with major asset managers to stabilize bond markets. When trillions are at stake, government and Wall Street work closely together. That partnership raises another question: where does private power end and public power begin?
So, who really controls Wall Street? It's not a secret society. It's not shadowy villains in a back room. It's a network of asset managers, banking executives, and long-term investors who control massive pools of capital. They influence companies, they shape markets, and indirectly, they shape your financial future. The next time the market surges or crashes, remember this: behind every number on your screen, there's concentrated power, and understanding it might be the most important investment you ever make. If you enjoyed this deep dive into financial history, make sure to hit that like button so more people can discover stories like this. Subscribe to the channel for more untold stories of money, power, and the events that shaped America's economy.